You know what's interesting? Right now, while you're watching this video, there's a letter that could be sitting in your mailbox or headed there this week that talks about money the government might owe you. And I'm not talking about some pie-in-the-sky promise. I'm talking about real payments up to $2,000 that are connected to Social Security, SSDI, SSI, and programs for folks on low income. Now here's the deal. The government doesn't exactly advertise this stuff with a big neon sign. They send letters, they update policies, and if you're not paying attention, you could miss out on money that's rightfully yours. We're talking about stimulus payments that got overlooked, dividend-style rebates from state programs and adjustments to benefits that are happening right now in 2025. I've been helping people take control of their money for decades. And let me tell you, knowledge is power. When you understand what's actually available, what these letters mean, and how to respond to them, you put yourself in the driver's seat. So let's cut through the confusion together and figure out exactly what's going on with these payments, who qualifies, and what you need to do next. Look, I want to start by being crystal clear with you about something. When we talk about these payments, we're not discussing some magical windfall that's going to solve every financial problem you've ever had. What we're discussing is money that's either part of legitimate government programs or adjustments to benefits that you've already earned through years of paying into the system. And that matters because too many people either ignore these opportunities thinking they're scams, or they get their hopes up about amounts that aren't realistic. So let's walk through this together step by step like we're sitting across the table from each other having coffee. First thing you need to understand is that there are actually several different types of payments floating around right now, and they're all getting lumped together in conversations, which creates confusion. You've got potential stimulus payments that some states are still processing from previous federal programs. You've got what some states call dividend payments or rebates, which are essentially giving money back to residents based on budget surpluses or specific state programs. Then you've got adjustments and supplements to Social Security, SSDI, and SSI that happen because of cost of living increases or corrections to underpayments from previous years. These are all different things, but they're all real and they all involve actual money that could end up in your bank account or mailbox. Now, when it comes to Social Security specifically, let me tell you what's been happening. Every year, there's supposed to be a cost of living adjustment. And for 2025, that adjustment is happening. But here's where it gets interesting. The Social Security Administration has been going back through records and finding cases where people didn't receive the full amount they were entitled to in previous years. Maybe there was a calculation error. Maybe your earnings record wasn't updated properly. Maybe you were supposed to get a supplemental payment and it fell through the cracks. When they find these discrepancies, they're required by law to make it right. And that's where some of these letters are coming from. They're not just telling you about your regular monthly benefit. They're telling you that you're owed back pay and that back pay can add up quickly. Let's talk about SSDI for a minute because this is where a lot of folks get confused. SSDI, Social Security Disability Insurance, operates on the same basic framework as regular Social Security retirement benefits. You paid into the system through your payroll taxes, and now you're drawing from it because of a qualifying disability. The same cost of living adjustments apply. The same potential for underpayments and corrections applies. But here's something a lot of people don't know. If you've been on SSDI and you're approaching retirement age, there can be some interesting transitions that happen with your benefits. And sometimes those transitions come with lump sum payments to reconcile the difference between what you are getting on disability and what you should be getting now. The government doesn't always explain this well in their letters, which is why people panic or get confused when they see different numbers than they expected. SSI, Supplemental Security Income, is a whole different animal. And I want you to understand this because it's crucial. SSI is not based on your work history. It's a needs-based program for people who have limited income and resources. The federal government sets a base rate, and then individual states can add their own supplement on top of that. Now, because SSI is needs-based, the government is constantly checking your income and resources to make sure you still qualify and to make sure you're getting the right amount. And just like with Social Security and SSDI, they sometimes discover they've been paying you too little. When that happens, you get a correction payment. Sometimes it's a few $100s. Sometimes if the error went on for months or even years, it can be a couple $1,000s. That's real money that can make a real difference in your life. Here's where the state programs come into play. And this is important because not every state does this. Some states, particularly those that have had strong budget surpluses or specific revenue sources like oil or natural resources, send out what they call dividend payments or rebates to residents. Alaska is probably the most famous for this with their permanent fund dividend, but other states have done similar things. California sent out middle-class tax refunds. Colorado has had Tabori refunds. New Mexico did rebates. These aren't federal programs. These are state-level initiatives, and the qualification requirements vary wildly from state to state. Some are based on income. Some are based on whether you filed a state tax return. Some are specifically targeted at seniors or people on fixed incomes. The key thing is that if your state is doing one of these programs, they'll send you a letter explaining it. Don't throw that letter away thinking it's junk mail. Now, let's talk about the low-income piece of this puzzle because this is where things get really interesting and where a lot of people leave money on the table. There are federal programs and state programs specifically designed to help people with limited income, and many of them tie into your Social Security SSDI or SSI status. For example, there's something called the Extra Help Program, also known as the Low-Income Subsidy, that helps pay for Medicare prescription drug costs. If you qualify for this and you weren't enrolled, you could be owed retroactive payments. There are energy assistance programs, sometimes called LIHEAP, that provide cash payments or credits to help with heating and cooling costs. There are property tax relief programs in many states for seniors and people with disabilities. All of these programs have different qualification thresholds, and many of them will send you letters if they determine you might be eligible based on information shared between agencies. Here's the thing that frustrates me, and I've been doing this long enough to see it over and over again. The government is terrible at communicating this stuff in plain English. They send you a letter that's full of bureaucratic language and reference numbers and codes, and they expect you to understand what it means and what action you need to take. And if you don't take that action within a certain time frame, you might miss out on money that's yours. I can't tell you how many times I've talked to someone who threw away a letter from Social Security or their state Treasury Department thinking it was a scam only to find out later that it was legitimate and they missed a deadline to claim a payment. That's heartbreaking and it's unnecessary. So what do you do when you get one of these letters? First, don't panic. Second, don't ignore it. Third, verify it's legitimate before you respond. Here's how you verify it. If it's supposedly from Social Security, don't call the number on the letter. Instead, go to ssa.gov or call the main Social Security Administration number that you can find on their official website. Tell them you received a letter and you want to verify it's real. They can look up your account and tell you immediately whether there's something pending. If it's from your state, same principle. Don't use contact information from the letter. Look up your state's official Treasury or Revenue Department website and contact them directly. It takes an extra 10 minutes, but it gives you peace of mind and protects you from scams. Let me tell you about the scams for a minute because they're out there and they're getting more sophisticated. Scammers know that seniors and people on fixed incomes are watching for information about stimulus payments and benefit increases. So they send fake letters, they make phone calls, they send text messages, they're trying to get your Social Security number, your bank account information, or they're trying to get you to pay some kind of fee to process your payment. Here's the absolute truth. The government will never ask you to pay a fee to receive a benefit payment. They will never ask you to provide your full Social Security number over the phone if they called you. They will never threaten you with arrest or loss of benefits if you don't act immediately. Those are all red flags. If you encounter any of those things, hang up, delete the message, throw away the letter, and report it to the Federal Trade Commission. Now, let's get into the actual amounts we're talking about because I know that's what's on your mind. The $2,000 figure in the title isn't random. It's based on the upper range of what some people are receiving when you combine different payments. For example, if you're owed back pay from a Social Security calculation error that went on for 6 months and each month you were underpaid by $200. That's $200 right there. If your state is sending out a $600 rebate to seniors, you're now at $1,800. If you qualify for a one-time energy assistance payment of $300, you've crossed $2,000. Now, does everyone get exactly $2,000? No. Some people get more, some people get less, some people don't qualify for any of these things, but the point is that these aren't tiny amounts we're talking about. For someone living on a fixed income, an unexpected $2,500 or $2,000 can be the difference between keeping the lights on and going into debt, or finally getting that medical procedure you've been putting off, or just having some breathing room in your budget. The cost of living adjustment for 2025 is another piece of this that we need to address head-on. Social Security recipients saw an increase in their monthly payments starting in January 2025. The exact percentage varies based on inflation calculations, but we're talking about a meaningful bump in your monthly check. Now, here's where people get confused. That increase is automatic. You don't have to apply for it. It just happens. But what you might need to apply for, or at least verify, is whether that increase was calculated correctly based on your specific situation. If you worked while receiving benefits, if you have dependents, if you're receiving both retirement and survivor benefits, the calculation gets more complex, and that's where errors can creep in. Here's something else that's happening right now that you need to be aware of. There are programs at the state level that are specifically targeting seniors who might be eligible for benefits but aren't enrolled. Some states have hired outreach workers or created online portals where you can check your eligibility for multiple programs at once. This is a good thing. This is the government actually trying to get benefits to people who qualify instead of making you jump through hoops. But you have to take advantage of it. You have to go to your state's website and look for these resources. You have to fill out the applications. Nobody's going to do it for you. I want to circle back to something important about SSDI and SSI specifically, because there's a policy change that's been rolling out that affects how resources are counted. For the longest time, the resource limits for SSI were ridiculously low. We're talking $2,000 for an individual, $3,000 for a couple. Those limits hadn't been updated in decades, which meant that people were being disqualified from benefits because they had a small savings account or a car that was worth more than the limit. There have been some adjustments to how certain resources are counted, and some states have eliminated resource limits altogether for their supplement programs. What this means practically is that some people who were previously over the limit might now qualify, and some people who are currently receiving benefits might be eligible for a higher payment amount. And if that change in calculation means you should have been getting more for the past several months, you're owed that difference in a lump sum. Let me talk to you about Medicare for a second, because it ties into all of this. Your Medicare premiums are typically deducted from your Social Security check. When there's a cost of living adjustment, sometimes the Medicare premium increases too, which can eat into your raise. But there are protections in place called hold harmless provisions that prevent your net Social Security payment from decreasing because of Medicare premium increases. If you're affected by this, the calculations can get wonky, and sometimes it results in you being owed money or getting a different payment structure than you expected. Again, this is where those letters come in. They're trying to explain what's happening with your specific situation. The other thing I want you to understand is that some of these payments are taxable and some aren't. Social Security benefits themselves are sometimes taxable depending on your total income. Stimulus payments generally haven't been taxable. State rebates vary by state. Corrective payments for underpayment of benefits usually have the same tax treatment as the original benefit. This matters because you don't want to spend money that you're going to owe taxes on come April and then be caught off guard. If you receive a lump sum payment of any significant amount, set aside at least 20 to 30% of it until you can talk to a tax professional or use tax software to figure out what you actually owe. I've been helping people with their money for a long time, and here's what I know to be true. The system is complicated on purpose, not because there's some evil conspiracy, but because it was built piece by piece over decades by different administrations and different Congresses, and nobody ever went back and simplified it. That complexity creates opportunities for things to fall through the cracks. and it creates opportunities for people to miss out on benefits they've earned. But it also means that if you're willing to do a little homework, if you're willing to read those letters carefully, if you're willing to make some phone calls and ask questions, you can make sure you're getting everything you're entitled to. So, here's what I want you to do after you finish watching this video. First, check your mail carefully for the next few weeks. Don't throw away anything that looks official without opening it and reading it. Second, create an account on SSA.gov if you don't already have one. This lets you see your benefit information, your payment history, and any messages from Social Security. Third, go to your state's Treasury or Revenue Department website and look for information about rebates, refunds, or assistance programs. Fourth, if you're on SSI or you're low income, look into your state's benefit enrollment programs to see if there are other programs you qualify for. And fifth, if you get a letter about a payment and you're not sure if it's legitimate, verify it through official channels before you do anything else. These 5 steps don't cost you anything except a little time.